Hi, this is Chuck Hughes. In today's video, we're going to look at a stock selection process that uses both fundamental and technical indicators to select stocks with the best profit potential. And I've learned through experience that companies that have a high rate of stockholders' equity growth normally provide the best investment returns over time. So when I'm looking at to buy a stock, I'll look at its equity growth rate, and then if it has a high growth rate, I also like to use technical indicators, my trend following systems, before I'll enter that trade. In other words, we want to see a stock not only have strong fundamentals, but we also want to make sure it's in a price uptrend, and that combination for selecting stocks has worked very well over the last 20 years. And I'm displaying a stockholders equity graph for Amazon, and we can see the equity growth rate for Amazon is very high, and it's averaging about 338% a year over the past 5 years. So Amazon has very strong fundamentals as indicated by its stockholders' equity growth. So you might ask, why is the equity growth rate so important? And let's take a look at what stockholders' equity is and why it is so important. The stockholders' equity is determined by subtracting the debt of a company from its assets, and it equates to the breakup or liquidated value of a company after all debt is paid. When a company produces earnings and it's able to retain those earnings, it increases its stockholders' equity. And retained earnings are normally the largest component of stockholders' equity or net worth. So when a company is able to grow its stockholders' equity, it creates economic value for its shareholders and makes a company's stock more valuable. As the stockholders' equity of a company grows, the company can in turn increase its productions or services. For example, banks can increase their loans, insurance companies can write more policies. So this increase in production or services can in turn create more income for the company. So a company that's growing its stockholders' equity is creating real wealth for its shareholders. Companies that produce and retain earnings enable stocks to provide the best returns compared to all other types of investments. And the increase in stockholders' equity of a company has always allowed stock investors to enjoy the highest investment returns. So as long as companies continue to produce and retain earnings, stock investing will always provide superior returns compared to all other types of investing. And of course, this is due to the increase in shareholders' equity or net worth of a company. So the growth in net worth allows stocks to outperform all other types of investments over time. So this is a very important fundamental indicator to look at when you're looking to invest in a company. Now, in addition to the fundamental indicator of stockholders' equity growth, I also like to look at the technicals for a stock, and I use my trend following indicators to check the price trend. And I'm displaying the major price trend for Amazon right now, and we can see that it's in a strong price uptrend. So in addition to the strong fundamental indicator where we saw that the stockholders' equity for Amazon was growing at a 338% annual rate, we see it's also in a strong price uptrend. So this stock has a lot of potential to the upside, and it's a buy at the current price where it closed today at $236.81. Or if the stock price is too high, the Amazon January 2012 220 strike call is currently trading at 31.30. So after checking the fundamentals, I then check the price trend, and we can see that both the fundamentals and the price trend for Amazon is very strong, and the stock is a buy at this point. Let's take a look at another company that it's growing its equity at a high rate. This is a stockholders' equity graph for Humana, the healthcare provider, and Humana has been growing its stockholders' equity at a 40% annual rate over the past 10 years. So very strong fundamentals for this stock. And we can see from this price graph that Humana is in a price uptrend with its 1-month price above the 20-month EMA. So Humana has strong fundamentals, is in a strong price uptrend, and is currently a buy at the closing price today of $74.77. And the Humana January 2012 60 strike call is currently trading at 16, and that is a buy also. And I'd like to look at one more company, Google, which has been growing its stockholders' equity at a 37% annual rate over the past 5 years. So strong stockholders' equity growth for Google. And Google is also in a price uptrend, as indicated by the 1-month price being above the 20-month EMA. So Google is also a buy at the current price, today's closing price of $548.50, and the Google January 2012 500 strike call is currently trading at $71.40, and that's also a buy. So these three stocks that we just explored have strong fundamentals as indicated by their equity growth, and they're in a price uptrend, and these three stocks are a buy right now. I use my trade selection process to select stock and option trades for my Inner Circle advisory service, and I'm displaying the open trade profit results as of October 3rd, and the Inner Circle portfolios currently have an open trade profit of over $785,000. The average return is 79.5%, and there's currently 119 winning trades and 3 losing trades, resulting in 98% winning trades. Now, if you'd like to get updated profit results for the various Inner Circle portfolios, just log on to chuckhughesic.com and click the trade results page for updated profit results. This is Chuck Hughes. I want to thank you for listening today, and I wish you the best in investing success.